I'd like to welcome you to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're talking about Form 8283 for non-cash contributions and the documentation that's required for our donors and the requirements for us as charitable organizations. So Form 8283 is frequently treated as a donor side form, but in reality, it has real implications for our organizations in our operations, our governance, and our compliance. Errors here usually don't surface immediately. They show up later during an audit or looking at due diligence or compliance, or when the donated asset is sold. So what is Form 8283? It's the document that the donor attaches to their personal income tax return or their corporate income tax return that claims more than $500 in non-cash charitable contributions for the year. The purpose is simple, but it's critical: to support the reported value of the donated property and to explain how the value was determined. All this is done on the 8283. It's not a formality. It is a valuation and compliance document that directly supports the donor's deduction and indirectly protects our organizations. Now there's two sections, Section A and Section B. Choosing the wrong section is the most common failure point when filling out this form. Section A applies to most non-cash donations that are over $500 up to $5,000. Common examples are household clothing, household items, clothing, and publicly traded securities. Now, Section B applies when the value of the donation or the items donated exceeds $5,000. With certain limited exceptions, this section also mentions or requires that a qualified appraisal be attached to the document. So there are very few exceptions to this, and there's some really strict rules as it relates to the appraisal and the appraisers. So if the value crosses the threshold of $5,000, you can't use Section A anymore. And if you, like I said, if you use the wrong section, that could lead to a disallowance of the donor's contribution deduction on their income tax return. So obviously, fair market value of the item drives what section is completed. Fair market value is what a willing buyer would pay to a willing seller if neither were under pressure. So that's an important distinction. And so how do you come up with that value? There's two key points that matter. The donor is responsible for determining the value and substantiating that value. So keeping the documentation. The charity is not responsible for valuation. So any overstated or unsupported values significantly increase audit risk for the donor. While the charity doesn't assign a value, it plays an important role in safeguarding the process for the donor through accurate descriptions of what was donated and the proper acknowledgments. So it's really important that we get those two things right for our donors. Many times when we're looking at Schedule B, almost always, we're going to need an appraisal by an independent qualified appraiser, and IRS has standards that have to be followed. The appraisal must be completed no earlier than 60 days before the contribution and no later than the date of the return for the donor. Some assets, such as cash and publicly traded securities, are exempt from appraisals, but you're going to want to check those rules and regulations to make sure that what you're looking at qualifies for those exceptions. So it's really important that we coordinate early with our donors so that we get all this paperwork done and they can get their tax-deductible donations. Any appraisals that are obtained too late or not at all can invalidate that donor's tax deduction. So what is our specific role as a public charity for Section B of 8283? We have to sign the form, and signing the form confirms the receipt of the property. It does not agree with the stated value. But there are other obligations that we need to be tracking. Now, if that donated property was disposed within 3 years of the donation, we must file Form 8282 with the IRS, giving them that information, what we actually sold it for, and then they go back and compare that to the fair market value of the item that was donated. So if we fail to track this, we're really creating a reporting exposure for our organization, which could lead to penalties with the IRS. So let's talk about the types of property that get extra scrutiny from the IRS. We want to make sure we're following all the rules associated with these items. Vehicles, boats, and aircrafts. Number one, those are the items that get scrutiny. Any artwork, conservation easements, a partial interest in a property. You can donate a partial interest, or any inventory or property held for sale. The evaluation of that is going to get special scrutiny from the IRS. Basically, when I say, I can't stress how important documentation is. It's very critical that we have the proper documentation. A deduction can be disallowed if the documentation is not correct. So the Form 8283 has to be completed. The required appraisals have to be attached. We have to have the proper signatures on the form, and we want to make sure that we have an accurate and complete description of the property that was donated. If we don't have these items, again, the donor's deduction can be disallowed. Let's talk a little bit about consequences. Non-compliance can result in the donor's deduction being disallowed. Obviously, I keep saying that. And reasonable cause may sometimes mitigate penalties, but it should never be treated as a fallback or a policy within our organization. We should really do our best to follow these regulations, because the IRS hasn't been known and the courts have supported the disallowance for not having the documentation. So what can we do within our organizations to make sure that we're doing what we need to do for ourselves and to assist our donors for the best possible outcome for them? And I divided this up into 2 separate sections. One is our executives. Our executives need to establish a clear gift acceptance and valuation policies, because we do have to evaluate for our internal financial statements. We need to be monitoring high value non-cash contributions and monitoring them for several years. And we need to integrate the governance oversight into this compliance process. For our operational teams, they need to maintain structured donor documentation workflows. We need to be tracking valuation thresholds and groupings, and we need to be engaging qualified appraisers early and not after the fact. And the coordination of the executive and the operational team responsibilities is going to help us minimize any errors. So now the key takeaways that I would like you to have for today is the Form 8283 must be filed by the donor when non-cash deductions exceed $500. Which section gets completed depends on the value of the property. High value gifts require appraisals and formal acknowledgments, and those acknowledgments will come from our organization. And any incomplete or incorrect forms can invalidate a deduction entirely. So I encourage you to review your current non-cash contribution procedures. Conduct an internal compliance check before filing season, because people are getting ready to take those deductions. And coordinate early with advisors on high-valued complex donations. Form 8283 is not just a donor responsibility. We share some responsibility and with the compliance issues. So getting it right protects our donors, safeguards our organization, and reinforces strong governance in our organization. I hope this was helpful for you today. And if you have questions on this or other topics, I am happy to answer those. Please put them in the comment section below. Of course, we always appreciate your likes. And I want to thank you for joining me today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.